Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again on euro currency. So on first glance the situation in the euro currency looks a bit confusing, just because we have some contradictory trends and maybe even patterns on different time frames, and very difficult to make the decision. Well, in relation to this, I could say that just technicals currently reflects and actually reflection of the fundamentals, because we have no solid fundamentals right now. There are two wobbling, and actually it depends too much on some occasions that could happen in the banking sector. Some public person could tell something like Jerome Powell, Janet Yellen, and nobody knows what they will tell. In today's weekly report, we have dedicated time to trying to make an analysis, to trying to extract some really major things from all this noise that we see currently in the headlines, in the mass media, in the speeches of the Jerome Powell and Janet Yellen. It's also a lot of contradictory points by the same person actually. So if you're careful to read what Powell has said in recent meeting, you could see lots of contradictions moments. So we have pointed them. And by the analysis, overall situation, the conditions of the banking sector, we have come to some conclusions, so that we share with you in our weekly report. Speaking on the technical side, despite the recent upward direction that we see here, on the long-term charts, the bearish context is not broken yet. So market has to climb above the 111 area and hold there. So it should not just show the wash and rinse and return right back down. It should break it up, holding there, and keep going higher to break the bearish context that we have on the monthly chart. Just because, to remind you, actually this downside action is a huge bearish reversal month in February, and we have large bearish engulfing patterns. Was the first part of the engulfing white candle, and this is black candle to the downside. And to raise it, market has to climb above this area. Besides, this level is a major monthly 50% resistance and monthly overbought area. So actually this was the background for starting Brent body trade. And minimum target of this Brent body trade stands at 110 area. So, but potentially it could go lower if it will be completed. We do not know, but this is minimum target, and this setup is still valid, it's not broken. To break it, market has to, just as I said, break it up and keep going, stand stubbornly above the top. In this case, yes, we would say that sentiment is changing. We do not have any bearish patterns, context is changing, and we should consider more extended upper targets on the higher time frames, on the weekly, on the monthly, and so on. On the weekly chart, in turn, trend stands bearish, and we have the bearish context on the weekly. So there we are watching for a kind of the double repo sell pattern or something of that sort. And this pattern that we have on the weekly chart gives some degree of the freedom how far market could jump up and move higher on the daily chart. It would be perfect if market reached the previous top, shows minor wash and rinse of the top, grabbing the stops about, and then collapsed. That will be perfect dynamic for the double repo pattern on the weekly chart, which could be a really perfect background for starting of the Brent body trade. That's what we have discussed in the recent few weeks when we talked about the monthly chart, where we discussed the possible patterns that could trigger this downward action. So that's why here, as market has some freedom to fluctuate inside of this range, moving slightly higher, it will not be the problems, it will not be the breaking of the longer term bearish context yet. And indeed, if you take a look at the daily picture, we have bullish MACD, and this pullback doesn't break the trend. So we should treat it as just a retracement with daily upward trend. By this reason, we are not considering currently taking any short positions. So to consider a short, we need that either trend will turn bearish on the daily chart, or we should get clear directional bearish pattern by the Jordan Napoli, which we do not have currently. So that's why on intraday charts at this point we're still watching for possible bullish patterns, bullish context, and see what will happen. That's what we intend to do on daily intraday charts. On the 4-time frame chart, you could see that collapse on Friday was a bit stronger. Market broken the area that we have specified for possible taking the position, even haven't given us a chance to, well, thought about something. So just because it was really fast breakout without any respect and it was collapsed, market right now stands right at the confluence. So theoretically we could get the print bottom that we discussed on Friday right from this level, but taking into consideration too strong sell-off, currently we should be more careful, and it would be better to not make a decision without getting clear bullish patterns on lower time frames. On the hourly chart, you could see how this has happened. That was the point where we talked about possible position taking. That was minor hand shoulders that we're considering. As you can see, when the market has reached the XOP, it hasn't turned up to form the head, but just collapsed. So here was no chance for taking the bullish position just because market has broken down. Currently, yes, daily trend has turned bullish, but hourly trend has turned bullish, but we do not have yet any patterns. So our task for the Monday will be just watch what we will get around the confluence area, because as you can see on the 4-time frame chart, market stands in the confluence. If here we will get clear bullish pattern, butterfly, head and shoulders, some double bottom maybe, something else, that might be used for possible taking the long position. So we will consider it additional, probably on Tuesday, if something will be formed. If nothing will be formed, market just collapse lower, well, then we will go with the daily scenario, controlling the trend direction. If it will turn bearish, correspondingly, it could mean that market indeed now is going with the starting going with the monthly pattern. So that, and any upward continuation will happen on the daily chart. So that's in 2 words what we intend to do. So, but first task on Monday, just watch what will happen around the confluence and whether we will get here any clear patterns for trading.